Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Conference. And I'm here with Raman Subramanian, who's head of applied research at MSCI. Raman, great seeing you.
Thank you, Tom.
And I really enjoy getting time with you because most people forget that the core, the pillars of the ETF business is all built on indices, and many that you folks had a big hand in.
Yeah, exactly. So if you look at the good thing about indexing world is that the innovations that you see in the investment world get translated into indexing world. So what you see is going to happen in the future in the investment world is something that we all closely watch in the indexing world, so that we can launch new products, new indices to cater to the demand which is going to come in the future.
Absolutely, and obviously we've moved from traditional indices, and now we're getting into factor indices, and now multi-factor indices. Mm-hmm. Talk about that evolution, and what does that mean to the average ETF investor?
Exactly. So if you look at what has happened in the pure investment world, investors were very local investors. They used to go into local equities and local markets. But in the last 30, 40 years, people have said that the world has changed completely. It's global, and Brexit doesn't affect only the UK guys.
Yeah.
It affects everyone. So in that context, just staying local doesn't make sense. If you really want to capture the beta of the market, you have to go more global. So indexes like All Country World IMI, these are broad-based global benchmark which provide global beta, has become key for investors who really want to capture that dimension of the investment process. Around the same theme, if you look at what has happened on the alternative premia side or factor premia smart beta, investors have captured that through active management. Now what they're saying that they've gained the experience of that, capturing that through active management. They slowly want to move into the space where they can have a better toolkit, much more smarter way of investing, and that's why these factor indices or smart beta products are coming out into the market. And not a single factor, people want to go for multi-factor because single factor are very cyclical and they can prone to ups and downs. So many of the investors are saying they can combine them in a smarter way, and that's why multi-factor indices are coming. Right. The third dimension, which is going to start out, is all about ESG, environment and social and governance. I think climate change is a reality. Last June, if you see this June, was the warmest season or in the last 130 years. So 3 degrees Fahrenheit, more than average, level of summers that we've seen. So investors realize that environmental social governance will be a key play for investment process, and Valiant and Volkswagen, all these are real case studies for people to understand and take a view and try to integrate ESG into the investment process.
So I want to ask you, what do you feel about this home country bias that we Americans have regarding our allocation to stocks? Why do we have so much invested in the US when global market cap is 55, 60% outside the US?
No, one point is about currency. People think about when you go outside the US market, you get this currency exposure. Now in the long run, yes, currency washout happens, but you get the added dimension of volatility attached to the investment process or investments itself. So, but now there are new toolkits. You have new ETFs which track benchmarks which are currency hedged. So those who are in the sideline thinking of going to global or international, were worried about the kind of equity process and currency, have a better understanding of it, and they can utilize some of these hedged indices and hedged products for catering to that beta itself.
Absolutely. Raman, as always, I always learn when I talk to you. Thank you.
Thank
Great
you, Tom.
seeing you.
Thank you.